Hello and welcome. Hello and welcome to the Decentralized Finance panel discussion. My name is Vytautas Černiauskas. I'm an expert at Civita and Startup Division. And today we have three amazing guests, participants of the discussion. I will introduce them in a minute. We will discuss all things decentralized finance related. This sector has been booming lately. It reminds a little bit of the ICO boom several years ago. And it's a very, very interesting, very lively sector that we will delve into and discuss what decentralized finance is, what are the opportunities that exist in the sector that is trying to disrupt the traditional finance. And together with me, I would like you to welcome three guests. Martin Quensel, he is CEO and co-founder of Centrifuge, a decentralized finance company. Keld van Schreven, managing director and co-founder of KR1, a crypto asset and blockchain investment company. And Marc Zeller, integrations lead at Aave. It's a technology company focusing on creating transparent infrastructure for decentralized finance. And for the introduction, I would like to invite Martin to tell us a bit more about what decentralized finance is, what are the main principles behind it, and after about 15 minutes of his presentation, we will kickstart the discussion, the panel discussion, and we will delve into the details of the potential of decentralized finance, some of the concepts and practices and legal aspects, and so on and so forth. So without further ado, Martin, please share the slides, and the floor is yours.
Let me unmute myself, share my screen. Thanks for having me here. Welcome, everybody on Facebook. And first of all, I need to start with a little correction. I'm a co-founder of Centrifuge, but not the CEO. That is my co-founder, Lucas. So did you hear me? I think I'm not sure. I'm unmuted. Perfect. Cool. So anyway, I take it from here, tell you a little bit more about DeFi and what's beyond the hype, etc. So yeah, decentralized finance, hey, what it is actually basically a movement. A movement which is, I think, kind of coming from the first decentralized exchanges and then really developed into an ecosystem of finance applications who mostly, use Ethereum or are actually built around Ethereum as a public blockchain infrastructure to create a subset of solutions to offer financing and finance solutions basically for all the crypto holders out there. The idea of DeFi is really give the world a new financial system. I think Vytautas, you mentioned it already. So what are the difference? If you look at what DeFi could do in the future, it would give people full control on their finances. It would create a system which works basically without banks and financial institutions, where you do not have a middleman, no one too big to fail, or a single bit point of failure and control. It is a system where everyone basically, who has access to the tech, basically, an Ethereum wallet and access to the internet could participate. There's no other barrier of entry. No barrier of entry if you're living in a specific industry, in a specific jurisdiction, if you work in a specific industry, if you have a specific, gender or whatever. So that is, I think, very important. And of course, it's 24/7 real time. So what surprises me talking to people in the traditional finance world, first that they live really in this, still think of a full digital system. Every bank is running on computers. It's full digital if they want to be successful. But hey, they have office hours, they have working days, but DeFi is 24/7, and even how interest is calculated, that is compounding per second. So yeah, so that is basically running on a trustless, decentralized infrastructure. Is there a counter side? Absolutely. So just to mention a few of those things happened in the short history of DeFi. I think really the biggest threat so far I've seen is the first time DeFi had something like a Black Swan event. It was March 13. If you look also on how DeFi has developed, you see all that. So if you would like to read that through, I'm not sure if we share the slides later. So I'll just look at the MakerDAO Black Thursday and get a few insights here. Yeah, hey, that is really where you can see economic risks, and that is also a threat to DeFi, and there especially crypto economic threats. So then all the craziness around food tokens, maybe with yield farming, I come back to that with the sushi dump, where basically also can go through a similar hype like we did in 2017 with ICOs. But there's also a technical risk, a risk of complexity, where if you have decentralized code and code interacting, and it's actually also offering the ability actually to kind of compose your own application, this combining different pieces, components, and codes, that adds complexity. And I think the flash loan exploit we had seen a month ago, that is a good example for that. So finally, what it tells us is, hey, DeFi is only as centralized as the most central part. So that is also a movement. If you think a DeFi, it's not a decentralized finance system as it is, and it is full decentralized. No, really looking at the different components, there are still very centralized components, because anyway, each of the projects, how they governance themselves, that is in different levels of decentralization, I would say. So what are the difference? Hey, it came from, when the blockchain journey starts with Bitcoin and Satoshi, and then really with the advent of Ethereum, we basically had used cryptocurrencies to I think, as a store of value, to transfer that store of value, maybe for, peer-to-peer transactions, payments, and for the ICO craziness we had seen. And DeFi is not a competition to that. DeFi is really built on top, and actually to offer applications to use exactly those crypto assets, those cryptocurrencies, to give them actually a utility and use them as we use fiat currencies, US dollar, euro, in our traditional finance system. So that's basically how we can understand that. That is really, hey, that is a decentralized finance, is a financing system for crypto. What is DeFi today, and what it is basically used for? So maybe first of all, I look at DeFi Pulse. I don't know if you know the website, so I think I need to stop sharing. Just opening my little browser here and share that for a second. So DeFi Pulse, check it out. Gives you always a good overview of where DeFi is currently, and if I just move in here, what is the US dollar value locked in DeFi for the last year? You have really seen the journey from something a year ago, this half a billion, up today to, what is it, 11 billion something. So that's quite a journey. Look at a market which is developing by, 22 times over a year. That is crazy, and also what you see here is that is basically the Black Thursday I was talking about, that little dump. And then this hype curve here, you look at, that is basically when Compound started yield farming in, I think, mid-end June. I think that was something like here. Yeah, so something like the 15th of June, I think, if I'm not mistaken. And here, those little things like that is, I think, the sushi thing here I have mentioned, and this little peak here is Uniswap and doing its airdrop. So let me go back to my slides. So, sorry, that was one too far. That is basically very connected, So, hey, what DeFi is basically used for is really margin and leverage trading. I'm not sure if I should talk a little bit about the detail, but this little weight machine here shows that, I may own Bitcoin and Ether and then use a lever. This lever here actually to not work with only my Bitcoins and Ethers, but leverage that and create a higher margin. So, that basically also comes with the latest thing who actually brought DeFi through the roof. That's called yield farming, liquidity mining, or any kind of, token rewards connected with, I'm using a specific protocol like Aave. Maybe in the discussion later on, Marc can tell us a little bit more about that. And if I use this protocol for borrowing, for lending, for whatever, I get a reward in the native token of this protocol. And I get that risk-free on top just for using it. And this extra return really had created, crazy margin rates over the last couple of months with a few 100%. Sometimes it went a little bit down again. Also, are over this craziness a little bit, and maybe also Uniswap has helped, not doing liquidity mining, but doing an airdrop. But that's basically what yield farming is. You get an extra topping on the usage of the network. And then coming back to margin trading and leverage trading, that is exactly what the people do, So everyone who has crypto understands DeFi. They use DeFi as a system for actually leveraging their crypto assets, kind of, lending my DAI or my ETH myself, and then do that in circles, and then also actually have there a much bigger exposure to those yield farming returns. So where I can really, use my my crypto to primarily farm DeFi tokens. And a nice example for that, and that is also one of those crazy things, most likely only possible in crypto, is that this is that I can lend myself money and use this money again to lend myself money again. That is, known in the old traditional financing world out there too, of course. So that is nothing new, but that is actually resulting in those things like that in Compound. I think the locked DAI in Compound are exceeding actually the number of DAI ever minted by MakerDAO. So that is where you can see, hey, with creating those circular economies and trading schemes, that is something where DeFi is as good and as bad as a current financing system. So looking at the ecosystem, you see, hey, that is just a snapshot of all the projects, and it's of course also not complete. I just stole it from Staking Reward, but you can finally see here the infrastructure. There you have the base layers, layer 0, layer 1, where actually the security and the value is stored, and then the trading layer is above, and how that is actually composed and interacting with each other. And that puzzle, this system of Lego blocks being built on each other, that makes it so powerful. That really is creating, I think, a new financing system where you do not rely on a single player anymore. You don't need to go to a bank. You can put the tokens wherever you want and use applications wherever you want. And those interesting things like aggregators and their protocols, where other solutions is a primarily focus, like Aave as a money market, or a Centrifuge as a bridge to real world assets, where they just can be combined, where just InstaDebt had an app out to exactly do that, to optimize your yield farm returns or whatever, So those things are basically not possible in the traditional financing world, and that will, I think, long term also create most likely a financing system which is not comparable to what we see out there in a centralized world. What is the missing piece? So I just put a little tweet here in this on a slide from Rune, the founder of MakerDAO, and I agree. Right now I think DeFi is from crypto nerds to crypto nerds, and really, to deliver on the promise, we create here a new financial infrastructure. We would also have to introduce real-world use cases. We need to make it relevant for the real world. We need to understand that basically, every current DeFi user, so that is every one of us, every single person, every business, every entity, banked or unbanked, in the future should be a user of DeFi. And I think, that is a long journey. I'm not sure if, that will happen, how long it will take, because there is a lot of issues, on the technology, on the legal infrastructure, etc. But I think the first step is really kind of onboarding real world assets, so creating the first bridges to the real world. So getting back to this picture, I think in this little legacy layer here on the top, that is most likely what I see being the most important technology layer in the next couple of months. That's it. I have a final slide on Centrifuge, but I think we can cover it in the discussion and would give it back to you, Vitaudas. Thank you.
Thank you. Thanks a lot, Martin. It was a very interesting introduction into the world of decentralized finance, and actually raises a lot of discussion points for our ongoing discussion. So to kickstart it, I would like to invite you to introduce yourselves and tell a bit more about what your respective companies are doing. Let's start with Keld. Keld, can you please introduce yourself and Care1 and what it is about, and give us a bit of context, please. Please unmute yourself.
That will help. Cool. Cheers. Okay. Good presentation, Martin. Enjoyed that. So Care1, we are an investor in decentralized projects. Anything that kind of innovates using decentralization at its core. We've been investing since 2016. Polychain, Coin Fund, and us were probably the first three funds to set up shop. We put our first money into Melonport, which is a DeFi project, digital asset management platform. And that was kind of the start of DeFi for us. And since then, we've done about 50 investments in four years. We've kind of invested in some key projects, pretty hands-on, helping them out. Nexus Mutual, Argent, to name two. So sort of seed investing those. So we invest in early stage seed style with checks. Unusually, we are a public company, so we trade on the London AXE market, which is kind of get FTSE, then AIM, then AXE. So it's like a junior London stock market. Because at the time when we try to raise the fund, investors are like, we don't understand what tokens are. This is kind of just before ICO started happening. So we're unusual. We're not private, so we're public. Anyone can invest in us. So we pioneered with ICO investing in a fund. We pioneered with staking from our Atom investment. We're a big investor in the Polkadot ecosystem, which is our latest sort of focus. And so we've been doing a lot of lock dropping, stake dropping, and investing in that ecosystem. And aside from me, I've been involved in the web since '94. Started and sold one of the first web development companies. So I'm much older than everyone else. And I had some Web 2 startups, mobile payments, being the last one. So I've seen the cycles a few times, but this is generally a very exciting, vibrant, all-inclusive community and opportunity for everyone, which has not really happened before.
Thank you. It seems that you certainly bring a lot of experience to the table. Marc, can you please tell a bit about yourself and about Aave?
Yeah, sure. So pleased to meet you all. My name is Marc Zeller, and I'm the integration lead and part of the integration team of Aave. Aave is a money market protocol. So I think we are the biggest lending platform on Ethereum right now, just behind the automated market maker Uniswap and the decentralized money minter MakerDAO. And my job is to, as we are a decentralized platform, anybody can build upon Aave. Our code is open source, and anybody can plug into our contract, access our features and services, and provide some added value on top of that. And that's the kind of synergy that we're probably going to talk a lot about during this panel. That in DeFi, nobody works in silo. You build bridges and create synergy with other projects all the time. And my lead role my main role is to make those third-party life easier when they want to technically integrate our protocol.
Thank you. Martin, you said you had something to tell about Centrifuge as well. Please.
Yeah, thanks. Yeah, maybe a few words to me. So Centrifuge is not my first startup. I had a few startups before. Did actually a journey from developing software more to kind of, building companies, and went from, this traditional on-premise software more and more into decentralization. This, I think the last step was Taulia, which is basically, an SAS supply chain finance network. And this Centrifuge, we would like to bring, those processes on decentralized infrastructure. And then when we founded Centrifuge, that was late 2017, early 2018, DeFi wasn't even there yet, but we already came with the vision. Actually, we would like to liberate how businesses are financed and get money, and the first step on how supply chain finance works. What is supply chain finance? That is basically, if I send my goods to my customers, and the customer has ordered something, there is something which is called a payment term. So I send my customer as a business an invoice, and the other business is not paying me directly, like, a customer in a supermarket. No, they pay me maybe in 30 days, maybe in 60 days. And during this time, the 30 and 60 days, I have to produce other stuff for my other customers. I have to pay, my bills, employ employees, etc. And that is what supply chain finance is doing. That is bridging this gap using an invoice as an asset. And then there's someone is financing this invoice. And what we're doing at Centrifuge is basically taking those assets, tokenizing them, and bring them into DeFi. So I think the first basically, we do that in a very sophisticated structure and so on. Just one of the first steps, is really kind of, not just what we're doing right now, or having it on DeFi and attracting individual investors and to invest in those assets. Everyone with an Ethereum address, with a wallet, can just go there and invest in those assets. No, really also attach DeFi protocols like Aave. And no surprise, we have just announced a partnership where, it's decentralization. It's not really, where two projects announced a partnership, even if we know each other, trust each other, both sides have open source code and can check what's going on. No, it's really kind of, hey, we as a community approach the community of Aave to consider, our technology and to create a money market in the future.
Thank you. Now let's delve deeper into decentralized finance itself. And I would like to ask you quite a broad question. You have, I think, already mentioned some of the things in the intro. What do you think are the biggest reasons behind this current boom of decentralized finance? Why does it become so popular? Keld, maybe you can voice your opinion, please.
I think it's like a trifecta, which is like a like a three-prong attack onto the whole system. You've got Bitcoin, which was suddenly wrapped Bitcoin, that got increasingly popular. You've got decentralized exchanges, which were seemingly sort of dormant for so long, but somehow just got their they started shipping code, doing the UX improvements on, which were initially terrible experiences on the early decentralized exchanges, which were almost unusable. They became super usable through dexes like Uniswap. And then you've got the compound effect, which was the governance token, basically giving kind of value back to people that kind of used the system. And that was like a light bulb moment for the community. And I think those sort of that combination of effects, basically this kind of it just saw a surge of volume, and that's kind of like an unstoppable force. And I think you can't really manufacture those three things to happen at the same time, but they kind of converged and created a new industry. And I think, I always like to go at a wider level. When there's two technologies that come together, that creates a new industry like mobile and internet. But this is like a three industries, three things coming together, creating like a super industry. And I think that's really ignited it. And then you had this kind of like the marketing aspect of this was this sort of APY yield sensation, which was basically, giving rewards in the decentralized exchanges and platforms to the users, and then locking those tokens up. That's how you got the crazy rewards, so you had to really commit into those platforms, and that's just marketing fuel across the internet for people just to say, well, I want to get a piece of that, with this liquidity that's involved in tokens, which is why we're all involved in it and so excited about it. Suddenly it's all inclusive, open, 24/7, unstoppable. And when you apply those three factors onto that with this marketing fuel, and the kind of maturity, and it's just like a technology maturity, incredible kind of marketing capability on this network. And then I think that's just like, that brought the volume, and I started writing an article on it. It was 1 billion locked, and by the time I finished it was 3 billion locked, and that's just insane over about 3 weeks. So that we've all been waiting for it. All of us in this industry kind of got a bit depressed after the ICO. Sort of, the innovation of that was incredible, but it really was. DeFi was always in there, and it just needed that trifecta of things to come and really throw the fire onto this sort of dormant little flickering flame, and we've all kind of been, reignited into life, and we're going through a bit of a lull, but this is all really good. It's proper cash flows. It's not just speculative stuff. It's real, and it just feels like a whole lot more of a mature, robust system than it was kind of where we were 2 years ago. Which, in Web 2 land is no, it's crazily compressed time in all of this. So it's just ruthless innovation that's going on.
Thank you, Keld. I think I definitely agree with you that the marketing component was, it didn't hurt for sure. Absolutely. The buzz that is created around definitely had an impact. Marc, what is your view on the reasons behind this current boom, and maybe it's not even has reached its potential?
Yeah, I completely agree. We are just at the beginning of DeFi. It's the end of the beginning because there's new waves coming, and I will talk about that in a second. As it was very clearly said, it's a range of enablers that allow DeFi to be in the current state. And for example, one of the biggest enabler of DeFi was the stablecoins. So the stablecoins are crypto assets that are pegged to a fiduciary currency. 99% of the time it's the USD. So you have DAI, USDC, USDT, and so on. And MakerDAO was the first to create a widespread and successful decentralized stablecoin, the DAI, and prove some product market fit for usage of the stablecoins inside the Ethereum ecosystem that allow the growth of USDT and USDC inside the market. And what is really important when you have a clear stablecoins ecosystem is that you can borrow the stablecoins. So you don't have to borrow speculative assets where the value will go up and down pretty easily. So you have the hedging tool and also the leverage tool. And when you allow people to do some leverage, obviously it's kind of interesting to the speculators. And what is the most important part is that it started with the stablecoin, that you had compounds that created the lending pool architecture, which is the basis of all the money markets. And Aave is an upgrade on what Compound did last year. And we took two different parts, but we all share the same roots of the philosophy of having a lending pool and mutualized pools of liquidity. So it was a pretty huge innovation. Then you have Uniswap that allowed seamless trading and swap of token directly on chain without having to have a custodian, and completely decentralized. Anybody can create and list a token on Uniswap with a few clicks. And all these enablers coming together, and the start of the synergy between the protocol, what we call the composability, enable the current state of DeFi. And the immediate next step that will happen probably at the end of the year is the scalability of those solutions. So DeFi will migrate and be replicated on layer 2 on Ethereum. So what currently cause a lot of transaction fee, what is currently slow, will be super fast to do and super cheap to do. So we can expect the volume to go 10x or 100x in terms of growth. And that's basically all the conditions we are validated, all the checkbox, and we just need the scalability that we're going to check. And we also need the real world assets, and thanks to Centrifuge and all the partners, it will come. So this is not, if you just discover DeFi today, you didn't miss anything. You just missed the early days, because the true funny stuff will begin at the end of the year and early next year.
Thank you, Marc. Martin, do you have anything to add? What is your view?
Yeah, like with those discussions, I can only agree. So absolutely, so DeFi was just this missing piece, where we most likely first time really found a utility for programmable world computer Ethereum, So, hey, we had Bitcoin. That was an alternative where you do not need to trust anyone to store your money and your wealth. And then we had this first decentralized stablecoin, Marc, you has mentioned, and then DeFi is actually bringing that together. And just to put it into perspective, how early we are with DeFi, hey, just compare the 11 something billion currently locked into DeFi, into the market cap of Bitcoin, and then look back into MakerDAO. So there are nice statistics. I think, it's still Ethereum being the biggest collateral, but also wrapped Bitcoin, I think, is already the second biggest wrapped asset in MakerDAO to lend against and actually mint DAI as a decentralized stablecoin against it. And that already shows, hey, that even the Bitcoiners, the most traditional kind of, blockchainers, they moving on and wrapping their Bitcoin and using it in DeFi. So DeFi is really kind of the new financial system for everyone doing crypto. And I agree with creating those layer 2 solutions. I had Cosmos and Polkadot on my slides. You also have a Polkadot chain live for origination and doing all these L2 stuff, to make it cheap and scalable, and then really doing what needs to be secured, investing and the exchange of value, do that on Ethereum. So that is also interacting with other protocols. And also, you mentioned Uniswap, Loopring is doing the first experiments with ZK rollup, and having decentralized exchanges on a much more, scalable infrastructure. So that will come, and real world assets, you mentioned it too. And real world assets, just to look that into perspective, hey, the 11 billion is nothing. Yeah, that is a drop on a hot stone compared to traditional CeFi. Just the balance sheet of JP Morgan, that is 2,600 something billion. And the assets, this single bank, it's, I think, the 7th largest bank in the world, that is 25 trillion. And that is a single bank. That's the asset they manage, and that is the world out there. And if DeFi, is going into this direction, just to give you a flavor, that is there is a long journey ahead of us, and I hope a successful one.
And just to close this topic, I want to remind that how competitive DeFi is compared to centralized finance. So right now, the volume are, for example, on Uniswap are bigger than most centralized finance platform. And the deal you get as a buyer or seller of an asset on DeFi is usually much better than what you can get on centralized finance platform, even with pretty heavy orders. So when you do the comparison, it's pretty clear that DeFi is eating CeFi right now.
I'm not sure. Sorry if I need to disagree. If you compare it to, when I mentioned a little bit the journey from Bitcoin to DeFi, what were the first step? What did the people do with that? They took their crypto and brought it to a custodian, to the Coinbase and Kraken of the world, BitMEX and whoever. And they are the first being disrupted because, hey, DeFi is a financial system for crypto, and those hopefully in the future unnecessary custodians and third parties, kind of having control over my crypto. Why should I do that? That is the first, I think, the first industry DeFi is disrupting, and also actually the youngest and just recently built on crypto itself. And if you compare that, I completely agree. If you compare that to the world outside there, with the fiat monetary system and the classic financing system, I need to disagree.
I agree with you on that side. If we talk about that part, I completely agree with you. But I was talking about decentralized asset exchange.
I love the discussion. I love that you're actually disagreeing on several topics or have contrasting views, even if it's complementary. I have a follow-up question which goes directly from this discussion about real-world finance and centralized finance. Even though compared to the traditional banking system, traditional finance sector, the amounts are really small. The sector, the decentralized finance sector, is still nascent in the very beginning of it. What do you think is the potential of DeFi to disrupt that traditional finance? Keld, maybe you can begin.
Yeah, well, we're all, mega positive on DeFi. Yes, obviously, we think, I think one of the main drivers on it is price. Basically, Bitcoin price, Ethereum price, total market cap. Those things really drive. The more valuable something is, the more people take notes of it and trying to actually get involved in it, and that drives the money men to come in on it. I think the more the price drives up, the more interest comes in. All that money sitting on the side will have to come in, and the sort of the kind of retail investors will sell their crypto assets to these institutions, and that is going to happen over the next period of time. So that that kind of sort of macro level is going to happen, and then there's a waterfall effect. Once you're in Bitcoin and Ethereum, you start looking around other. What can you do with it, and that just trickles down into DeFi automatically. So that's that sort of big pipe flow is the institutional money coming in, which it's coming in. There's a lot sitting on the sidelines still. I mean that sort of narrative has been around for 18 months, and once money comes into that pipe, it tends to trickle down into getting that crypto to work, in lending and things like that. So that is just a natural consequence of more money coming in. It will end up in DeFi. There's nowhere else for it to go. And as Martin is working on Centrifuge, that's only going to increase from another pipe, which is the collateralization and tokenization of real world assets feeding into that pipe, which brings up a whole new sort of flow into that, and that will end up those tokenized assets will end up in DeFi as well. I mean, that's just, they're not going to sit idly there. Idle assets are wasted assets, and that's why Wrap Bitcoin, Wrap Nexus Mutual, lots of other examples. We're going to see staking tokens that are locked in staking becoming liquid with lots of staking token liquidity. That's also coming. So these idle assets are going to be put to use, and it ends up in these new platforms like Aave and Centrifuge. So yeah, it's but these things take so long. I mean, God, look at the internet. I witnessed that firsthand. Like, it's going to change the world from 1994 to really going properly mainstream, in the 2000s, after the 2000s, and that's like, a long time to wait. So, DeFi is just getting kickstarted. Maybe another 5 years before it really gets super traction. It's just timeframes are unknown on this. Obviously, the internet created a network for things to grow super fast. So this is like a network alongside that network, so that it could grow even faster. So, these network effects are accelerating. And once you've injected these tokens into that, then there's no stopping them. So, that's a kind of long-winded way of saying, it's all going to end up in DeFi, basically. Yeah, it's a bit of a macro look at it, which I tend to look at.
Yes, I agree with you that it's definitely going to take some time. It's not going to happen overnight. What do you think, Martin? What is the potential of disruption in the traditional?
So, yeah, no one knows, what is happening there and when. So I think it's not only price, it's also usability. The breakthrough for the internet was usability in 2 dimensions. It was having a web browser which is usable, but also actually understanding the technology, or kind of taking away the technology, shielding the technology. Well, that was the second one, configuring DNS or a proxy or whatever, all these things you had to do in the beginning, and bandwidth, scalability. So internet was no fun in the beginning. I can tell you, in 93 and 94, there was, it was an ISDN line and 64K bits, that was not fun. So I think it's not only those two. One of the things which could be really the breakthrough for DeFi is stability. If you look at the financial system today out there that has issues, look at the 0% interest rate in Europe, look at, the stability of our economic system at all, where just the money printer is going burr, and the monetary system itself is kind of, it's a house of cards if you look at it, kind of, and parking their assets on an independent alternative, which is DeFi and crypto, makes sense, and that could be the breakthrough. You see that already in countries, where especially in the tech sector, in Argentina, in a lot of African countries and so on, the people would like to get paid in DAI, a stablecoin which is decentralized and which is not connected and not pegged to even a US dollar. Kind of, it is pegged on US dollar, but the underlying asset, that is not US dollar. And actually changing this peg is for MakerDAO would not be a big deal, because the underlying assets are not US dollar, So, and that could be a game changer, So one of those things is, hey, whenever the financial system is running into issues and parts of it showing to be unstable, that will be a push for DeFi, I think, absolutely. So, and that is one thing. The second thing is just to, as a counter argument that it may take longer is all the regulations and the legal issues DeFi is facing, especially if it comes to real world assets and real world relevance, where you look at the European Union, this MiCA proposal, look at what the US is doing, the SEC. So a lot of concerns, of course, in the traditional financial systems, the regulators and the governments. What is happening with those, decentralized financial systems with its own stablecoins, its own value transfer, and actually, they give up their right on printing money, and give up control on the economy, where a central bank and the currency is one of the pillars, the cornerstones of how to control an economy, so that will be also interesting.
The legal aspects are certainly very important, and we will come back to this question a bit later in our discussion. Marc, what is your view?
I think, I'm a huge optimist, so I always see the bright side. And I think DeFi to thrive and to grow doesn't need the real world or the physical world to completely collapse in the economy to be like the alternative. I will let that worldview to my friend the Bitcoiners, because I think the only thing they expect in life is everything can be destroyed so they can be rich. And let's try to take the optimistic side and say that in itself, DeFi as a user looking for passive income, so depositing stable coins, for example, never touching the speculative asset, because I don't think like 80 or 90% of the people will overnight become traders and margin traders and speculators. I think most people just have a few savings and they want to collect some passive income on top of it. And in itself, DeFi is super powerful as a narrative because it's a decentralized saving accounts. And what I envision next year for 90% of the DeFi user is that you will have an app such as Argent or already Dharma, but Argent is a great example of that, where you input your debit card or you do a wire transfer from your euros or your USD. It's automatically converted into stable coins that are deposited into Aave or other platforms, and you start collecting yield every single second. And when you withdraw, it's automatically converted back into fiat, and you don't even have to know that there's a blockchain around. And what is important is that you will do that directly on layer 2, so you will never touch the Ethereum settlement layer, so you won't even have to understand there's transaction fee somewhere, or gas, or block time, and all this crazy technical stuff I enjoy building every day, but that 99% of the population don't care, because when you type google.com on your web browser, you don't have to know that there's a 80 port, that there's a DNS, IP address, all of that. You don't have to know, because a lot of people work hard to make it seamless for you. And DeFi will be like that sooner than people think.
That's a very optimistic view. And speaking about all the technical aspects, there, as I think Martin said in the beginning, the DeFi is a bit of a geek's game. There are a lot of technical terms, abbreviations, technologies that you would need to understand to be in the game, and the people that are active are very, I would say, tech savvy in this sense. How do you think all these concepts, products, services of decentralized finance can be taken from this world of exotic instruments and then financial instruments that not that many people understand to the real life, to like ordinary citizens that don't have the technical expertise, and maybe you could talk about real life applications and moving towards real life beyond just maybe trading stable coins or leveraging on the crypto that people would have. Keld, what do you think?
Yeah, no, obviously that's kind of how does crypto break out of its kind of little cozy little world? I think there's some great examples of that. One is what I really like is Ether Risk's crop insurance and hurricane cover, where say a farmer in a developing world can insure a field against crops for a period of time. So the smart contract will kind of look at the last 20 years of weather against that field, and then create a premium out of that kind of risk analysis, and then charge some crypto to the farmer to make the cover. And then if there is a hurricane, the oracle will automatically tell the smart contract that, and the farmer gets the money immediately. I mean, things like that, real world, that can change the world examples. And decentralized finance alongside, the developing world getting access to finance. But that kind of real sort of application would be a dream really and a validation for the technology. So all the people that are not included can suddenly get included in the financial system with examples like that. And then on the other hand, you've got if you're not talking about things like loans and that, which is also kind of real world, are NFTs decentralized finance possibly You know, I know artists now making a living out of NFTs that weren't before. They couldn't make a living as an artist. Now they are. That's kind of decentralized finance? That's real world. They're not technical people, but there are sort of there is an inherent problem with real world getting involved in DeFi because of the usability of it and working with MetaMask, and it's just too complicated at the moment. So yeah, that's kind of a problem. I think the meme farming thing has been great. Well, in one respect, it's been great, but bad on another. To get people kind of more, kind of to get it easier, to feel it's easier to be involved in it. But yeah, so real world examples are, I'd say, farming, developing worlds, NFTs, if that is one. I think those are like super interesting places where it's having an impact.
Thank you, Keld. Marc, what do you think is the potential of DeFi going into a real world, and just practical examples of practical potential?
There's a wide range. As it has been said, the insurance for the crop is super interesting, because on the technical side is a huge challenge to who defined what happened into the physical world. So all the work around oracles and inputting data into the blockchain is like an area of high interest for me, for the technical challenge it represents. But there's also like you say, the artist, it's incredible because you are the owner of your assets for the first time, especially on this side. And obviously right now the NFT is about art, and art is a huge market on itself, but it's not a market that will bring everyone. It will bring collectors and it will bring artists, but I don't think it will be like dozens of millions of users around that. But this is the NFT, the foundation of creating digital assets inside ecosystem that has some intrinsic value that cannot be replicated overnight, that cannot change overnight. And when you mix that up, like DeFi is all about synergies. So you have the financial layers with like the DeFi protocols that will bring some passive income. You have the NFT layers that will create some assets that cannot be replicated and modified. And you can also have the gaming aspect. And when you mix all three, and you have, like, for example, tournaments where you will gain a special object that, as long as you hold, you will make some collect some interest, or some RNG to win some stuff. You can create economies inside games that will be like crazy interesting. Like, I had spent quite a few times playing games, and for example, I don't know if you guys knew Team Fortress, but Team Fortress 2 had like some in-game store and a whole economy about object in games that was like millions of dollars of volume. Also Aave Online, all these kind of games, and there's a huge project market fit. And I think if you mix that up, leverage inside the layer 2 with projects such as Aave, which is about to be released at the end of the year or next year, or other project like Voxel, all this kind of stuff, you will go from a DeFi ecosystem, which is, according to, or you count the numbers, 50,000 to 300,000 people right now, to a DeFi ecosystem which is dozens of millions of users, because I think there's going to be more gamers in the world than speculators doing leverage trading. And the good thing is that for the first time in financial history, the speculators, they are paying interest to provide the income of the gamers. So finance is working for gaming now, and that's crazy. That's a new word.
Yes, that's a very interesting use case for sure. Martin, do you have anything to add?
I think just, elaborating on that, on the discussion. So, hey, we had ERC20 tokens as a smart contract standard to help us build a financing system and a system of exchange for everything fungible. And that is what DeFi is doing today. So all the tokens, you exchange on Uniswap, or where you invest in and have a pool on Aave, that is ERC20, and then bringing NFT into that and making that something which where one side can work with the other. That is, I think, the challenge that we need to solve for real world assets. So I think, with thinking of a non-fungible token, so a smart contract interface actually representing access to a non-fungible piece of something that could be a CryptoKitty, game collectibles. I was more the fan of World of Warcraft back in the time, but anyhow, cool. Like the example, that is easier because, hey, you have something digital and connect with something digital. Looking at a farm field out in Africa, that is so much more complex. Hey, that could also a single farm field owned by a single farmer. That could be an NFT, a non-fungible token representing this ownership. But then proving that you really own the field. That what was the weather condition there? How did it change? Did a hurricane came? Did this hurricane really affect the field? And what was actually destroyed on the field? Was there really something this farmer wanted to harvest? All these things you need to rely, of course, on an infrastructure which is pretty much not decentralized. That is a single centralized sensor, a satellite image whatsoever, making that kind of reliable, working in a trustless system. That is what we need to do to give DeFi real world relevance. And how we do that at Centrifuge is just 2 sentences here, is really kind of putting those NFTs together of a specific risk class, invoices of a specific industry or whatever, where one single NFT is representing one single invoice. I had that in my other example before, and then basically pool them, create something like an automated decentralized fund management structure around that. And then actually for everyone who wants to invest in that could be Aave as a money market, creating ERC20 tokens, and where then those worlds play together to have a decentralized protocol actually being able to consume NFTs and mint ERC20 on the other end, and also the other way around.
Thank you. Let's talk about the legal aspect that I have promised to come back to. The decentralized finance players operate in a sort of a legal vacuum. Some experts even say that it's a lawlessness that they talk about. How do you think the customer protection and compliance can be ensured in this sector when we talk about serious financial services, borrowing, lending, leverage, and so on and so forth, especially when we talk about large amounts and big risks in a non-regulated environment where there are very few safety nets, and you, Martin, mentioned the risk and threats that are related to the opportunities. Maybe you can talk about how can we mitigate those risks and how this sector, which offers serious financial services on a global scale, how can we ensure the protection of people involved?
First of all, I think also how you ask the question already reflects how the legal system out there in the world is looking at it. But crypto is different. Crypto is creating a decentralized, trustless system, and that brings value. So, and if you really kind of think of what it actually means, is you do not have a paper contract, you have a smart contract. That is not a lawyer. You need really to audit it and to have a legal opinion on it. You need a developer who does a code audit and tells you, hey, it is secure, it works, and it's protecting you. And these two worlds, also all the discussion out there I'm seeing currently is completely disconnected. So what lawyer is talking about is how to give tokens legal substance, how actually take all the crypto pieces we are creating in DeFi, for example, to take them and make them actually working in the existing legal system. And that is, for me, really completely the wrong way, because you turn the the upside down, and that doesn't make sense. And that is a long battle before us, really, to change those things. And currently, that is with those Mickey Mouse steps where we try to give token a legal relevance, where we try to use tokens as something where you own a security and can transfer a security, and you do not need a central registrar anymore, like you need that for trading shares. And then the blockchain could be actually the registration service, things like this. Where you see the European Union, Liechtenstein were the first country doing it. Switzerland is following. Germany is thinking about it. Creating those can actually what is an asset, and how can an asset be tokenized, and how actually the ownership of an asset can be kind of represented in a token. So these are the first steps, but again, I think that is falling too short. So what we currently doing, and I think all the other crypto projects as well, trying actually to translate what we are doing into the existing legal world, and using existing legal frameworks to cover what we're doing on the blockchain currently. So that we have basically two parallel worlds. One is crypto, where you have a trustless system of ownership and ownership and value transfer, where I have a token, and this token gives me a right for something, and I use it. So on Centrifuge, on our protocol, if you buy a share of a pool with your stablecoin, you own this share, and if you give that share back, of course, you get the return and your stablecoin back, and that is a protocol. I do not need to sign a contract for that. That's how it is designed to work, and no one can stop it from working. And nevertheless, we have to create a legal system outside of it, where an SPV is the issuer and the administrator of the pool, and you sign a subscription agreement or a participation agreement with the SPV, and so on and so on. So and I think the DeFi long term would need a completely different legal system, which is on chain.
Got it. So trying to have the decentralized finance comply to the traditional legal system is sort of trying to put a square peg in a round hole. Keld, what do you think about that?
Yeah, I like that analogy. I think it's square peg in a round hole is good. I think it's basically when two systems rubbing up against each other. There's friction that one doesn't fit in the other one, and it's trying to. They're both trying to do some kind of merger, but they just can't do it. They're not kind of working. So if you look in the UK, the FCA just basically said derivatives are bad. You can't market them to retail customers. So that's the first step in the FCA kind of basically saying, they're allowing some things to happen, but not others. So leverage is not great for retail investors. There's lots of terrible stories around that. So yeah, there's always the threat of regulation. It's been around for, since 2018, I'd say. So for projects, the thing to do for decentralized projects is to launch and not worry about it. And then once heavier regulation comes in, then you won't be launching. So it's important to get the project in a place that's kind of jurisdiction friendly to kind of launch it. And then then you're kind of in a more solid footing going forward. But it's the jurisdiction hopping conversation, which is also part of this. Where do you want to locate yourself? It ultimately always comes down to where are your users, and are they in Germany, UK? Well, you have to abide by those laws, and if you don't, then you can't trade in those places, and that will rub into decentralized as much as centralized. But again, how do you stop that? That's the difficult part of it. That was all to be figured out. So you physically can't stop it, but if you get caught, then you'll probably have an issue. So it's a very difficult situation. This kind of legacy system is not adapting well to decentralization. It never really has. And if you look what happened in the music industry with Napster, eventually shut that down, but that took many years. And the peer-to-peer revolution really, where the end result of that, it was file sharing, music, and then Skype was a direct correlation of that. Satoshi Nakamoto took file sharing to the next level with file sharing for money. So the logical line back is that, industry doesn't really like decentralization and shuts it down or consumes it. So, it's basically stable coins. That's one step towards it. Decentralized services will have to have some kind of operational license of some sort to work in a country. So to get the full protection of the end consumer. So it's just a natural progression of it happening. It's just over what time it'll happen. But for decentralization, for projects, they should just start in a good jurisdiction and just, the quicker they do it, the more likely is they can continue to trade after these kind of laws come in.
Marc, what do you think about reconciliation of compliance of decentralized finance as well as consumer protection?
So that's a huge topic, and I will try to stay balanced because obviously I'm biased around decentralization myself. But if I want to be balanced, the first thing I want to share is that there's no such thing as lawless environment. Everything you do is you have to follow regulation, and even if no one can prevent you, for example, to do a trade on Uniswap. Nowadays, it's almost impossible to acquire some crypto asset and sell crypto asset without doing some KYC, so customer identification. So as the regulation and enforcement can be here when you get in and when you get out, no matter what you do, everything done on a public blockchain is written forever inside the ledger. So there's no such thing as a lawless system. And that's one thing, but there's something called permissionless system. So no one can prevent you to do a swap inside Uniswap if you have the capability and you are ready to pay the transaction fee to execute that operation. And there was a tweet very interesting and funny from Aidens, which is the founder of Uniswap, saying about what about regulation? What if Uniswap is outlawed? He was saying, and it's true on the technical perspective, well, it's decentralized, 100% decentralized, so there's no stop button. So if they ask me, I can tweet, please stop trading, and that's it. And with actual decentralized system and permissionless system, that's basically it. And for example, who launched the Aave assets that basically happened with all governance very recently. On the technical perspective, we had a bit more than 800 person voting with their assets in order to say if they want the Aave asset to be created or no. And the outcome of that vote activated the smart contract that launched the Aave assets. So some of these 800 address that are not identified, they are all pseudonymous. It's something on the blockchain, 42 hexadecimal characters. Some of them are like, let's say, $10 worth of the land assets, some of them $1 million. And it's very hard to identify those guys if they don't go out. And that's because the Aave protocol is completely decentralized. So it's almost impossible to prevent that from happening. So it's the same situation. If the lending platform are outlawed, we will comply as an entity and as a team, and we will tweet, please stop using Aave. But that's only the only thing we can do. That being said, it's only applied to fully decentralized assets. And that's not because something is decentralized that it cannot be permissioned. And basically for real world assets, for assets like the one minted by Centrifuge, the one minted by Realty for real estate, those assets are securities or assets that need some compliance, to be traded and all this kind of stuff. And you can be decentralized and permissioned and having a whitelist. And it's completely normal that in DeFi, you will have specific market for specific assets where you will need to identify yourself, do some KYC, do some AML. And if you want to interact with those assets, You cannot be just a random string of 42 hexadecimal character on the Ethereum blockchain hidden somewhere. You will have to show your ID at some point. And that's a way for the regulation to be more present and more proactive, because it will be more interesting. So both can coexist. It's not, for me, DeFi is all about being inside the spectrum. Some markets and some assets and some platforms are 100% permissioned and decentralized. Some are decentralized but permissioned, so you have to show some ID, you have to identify yourself, and some are completely centralized. You have to be whitelist, and you can only interact with those products if you are met the current condition of the regulation. And I think all of that can coexist. That's not an issue.
Thank you. Sounds like a paradigm shift in so many areas, including the legal system and our minds too, our way of thinking. Time for the last question. What do you think is the future of decentralized finance, specifically from the perspective of real life applications? Which way is it heading? How do you think it will look like in several years? Martin, can you share your views?
Yeah, of course, that's a very, very personal view here. That's my opinion, of course. Yeah, I think DeFi is a door opener for decentralized technology. So that is first, I think, use case where blockchain can prove that it has a utility and that it is both for more than just cryptocurrencies. That is also kind of the incubator where a lot of those features we need for DeFi, we mentioned, the farm field, where you need an insurance layer, where you need an Oracle layer, connecting it to sensors and weather data and whatever, etc. All these things, they will be used in different contexts. And then all the other use cases be discussing for years, and they never took off, like, tracing of goods and things like this. That will be an incubator for those. So I really believe DeFi could be this first thing helping blockchain to get kind of general adoption.
Thank you. Marc, what do you think what the future has for decentralized finance?
I think, and that's my vision for most technology. A technology good enough is invisible. And I really do believe that next year, a lot of people, and when I say a lot of people, I am saying millions of people will use DeFi without even knowing that the word Ethereum or the word blockchain, it's just going to be some cool app they will have on their phone or a cool website they use, and they connect their real world funds like fiduciary currency and just invest in a wide range of cool products. They want to insure something in the third world, do for it. Click on the box, do the wire transfer, and it works. You want to expose yourself to a real world assets or tokenize invoice or this kind of thing with Centrifuge, click on the box. It's done. You have some euros and you want a stablecoin euros and earn maybe 3, 4, 5% APY on it thanks to Aave. Click on the box and it's done. And basically, this is the future of DeFi, and it's not 5 years from now. It's next year.
Sounds really good. Thank you, Marc. Keld, what do you think? What is the future? Which way are we heading?
Well, that's a big question. Yeah, I think. We are going into a very exciting time with, it's kind of like at the moment, nation states are trading amongst each other, but we're going to have internation states with it's like cross-chain technology is going to allow, Polkadot, Cosmos allow all the chains to transact with each other, with Ethereum probably as the final settlement layer. And then sort of in the wider level, the kind of, the applications that I talked about earlier will become real and more usable in a non-crypto kind of way that people can interact with it. They don't know it's crypto, and the sort of the kind of food farming craze that we've had will probably reboot in some other way. For this could be finance for anyone really, across any age, very inclusive. So I think we're going to see spikes of activity and then depressions and then spikes, but those will be bigger and kind of higher market caps. So yeah, we're in for a bit of a rocky ride, but the general trend is to some future world where there's much more inclusivity for everyone around the world, with decentralized finance at the heart of it. So it's like as important as the internet is for people, in the next 10, 20 years, I'd say.
Thank you, Keld. Seems like, as you said, it's a rocky road, but at the same time, it's just the end of the beginning, as Marc said. And there are still a lot of exciting things waiting for us in terms of decentralized finance and probably other decentralized applications in the future. Thank you all. Thank you, Martin. Thank you, Keld. Thank you, Marc. I would like to also show one slide for the participants of this webinar. Two things. One in the Facebook Live comment section. Please fill in the very, very short survey. We would like to know more about our participants and who you are and what organizations are you from. This would really, really help us going forward. And another thing that I would like to tell you is within the Blockstart program, we have developed this tool that is called Do You Need Blockchain? And we think it's quite a neat tool to evaluate the potential of blockchain application within your company or organization. It helps you assess the needs with your solutions with the help of quite simple questions. So I would encourage you to go to blockstart.eu/DLT and use the tool to evaluate the potential of blockchain, as well as fill in the survey in the comment sections of this webinar, this live stream. Meanwhile, thanks a lot. We had Martin Quensel, co-founder of Centrifuge, Keld van Schreven, co-founder of Care1, and Marc Zeller, integrations lead at Aave. Thanks a lot, gentlemen, for joining. This is the end of the webinar. Thank you for sharing. Thanks for a really, really deep discussion. I really, really appreciate that. Thank you.